Well, if you ask John Q. Public, they'd probably tell you not much happened in stock market here today. After all, the S&P 500 was effectively flat for the second straight day. Yet I'm here to tell you that the last 2 days have been the two most disruptive days I've seen in the stock market for the entire year. So I'll take a look at some of the different rotations that are taking place in tonight's video. And then, of course, we're going to get into our trade application example, and it kind of shares some of these same themes that I've been seeing with the rotation in the last couple of days. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 10th, 2019. First of all, if you're new, welcome aboard. Remember to subscribe to our YouTube channel. While you're over there, click on our description area where you can sign up for our email distribution list. You can also follow us on Twitter. My handle is @BrandonVanZee, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. Lastly, we do have a presence on Facebook as well. Feel free to join us at the web address embedded in the logo in front of you. All right, let's go ahead and dive into the charts. As you can see, I've got chart 4B pulled up here in front of us. And this is just a simple four grid here that will show us the four major U.S. equity indices side by side. So that way we can kind of get a sense of any sort of differences that might be taking place amongst the major indices, if any. A lot of times they look pretty much the same as one another, but this happens to be a time where we are seeing some solid distinction between the various charts. In particular, notice down here in the lower right-hand corner, this is the Russell 2000. This is your small cap index here in the United States. We closed almost at the high of the session here today. We were up over 1% on the on the Russell 2000. And if you look at the other charts, they don't really look that way. Now, the other charts don't necessarily look bad. They don't look terrible. They don't look great. They don't look much of anything other than different than the Russell 2000. You'll notice that this orange tag right here lets us know about the daily range. In other words, was today's range from high to low bigger or smaller than what it typically is if you're using the ATR, or the average true range? And so on the Russell 2000, that's the only one that has that orange label to let us know that today was an outsized range day. Whereas if you look at the Dow Jones, the S&P 500, and the NASDAQ Composite, all of those are in blue, letting us know that today was a smaller range day. Now, in addition to that difference, you'll also notice that where we stand right now with the Russell 2000 is up and over some of these levels that we had been concerned with in the past. Many of you know that we've been kind of dealing with some chop and slop in August, and during that time we had the Russell 2000 being an actual laggard compared to the other large cap indices. So all of a sudden this week it looks like it's coming alive, and it's going up at a much faster pace. Just look at the last 5 candles on the Russell 2000, right there, right there, right there, right there, and right there. Now, of course, we had that one down day in the middle of those last 5 sessions, but otherwise that looks like it's basically a straight line higher there. We don't necessarily have that type of behavior out of the other indices. The biggest difference, I would say, is probably in the NASDAQ Composite, which is the chart just to the left of that. Notice the NASDAQ is actually rolling over here. Now, note that all of these charts still have a bullish posture from an intermediate perspective, according to the Market Forecast Technical Indicator. But when you look at the price action here, notice the NASDAQ has rolled over for 3 straight days here. This is something that David brought up in last night's video, and I've been mentioning a lot on Twitter here recently as well, where we're starting to see some interesting rotations that are taking place in the markets here. One of those key rotations is out of the once red-hot technology stocks, especially your cloud computing and software as a service stocks that were one of the pockets of strength of the market earlier in the year. They have been absolutely decimated this week. I mean, some of them are down 15, 20, 25% in just a few days. And so that is starting to impact the NASDAQ, which of course is technology laden there. And while you have some of the larger cap technology companies that kind of steal the thunder, like Apple here today and their big announcements with their iPhone and whatnot, you do still have a lot of more kind of volatile growth types of companies that are in there. So we are starting to see a little bit of distinction in the charts here. Russell 2000 small caps looking really strong over the last week. The NASDAQ, it looks like it's going to start to roll over here. Now, all of our charts are dealing with downward trending moving averages. So that's another thing that we have to be aware of. But with the momentum we're seeing here with the Russell 2000, there may be some hope that it'll start establishing kind of a new range above that moving average. And if it can manage to do that for a longer period of time, it would have the ability to start pulling that moving average a bit higher there as well. On the S&P 500, I mentioned in the intro, is effectively flat today. So it was up 0.03%, basically a non-event of a day for the second day in a row. Yesterday's day was effectively that way as well, as far as where we opened and where we closed. The last 3 days have basically been in a line right there. Some of you might recognize that that candlestick right there. So let me right click and go to maximize sell here on the S&P 500. Some of you might recognize that candlestick right there, and it might look to you like a hanging man candlestick pattern. Now, we do need to wait until the following day for confirmation of that. So just because it looks like it today doesn't necessarily mean that it will become one. We need to see a sell-off day, but nonetheless, it does look like the S&P 500, after having a nice oomph off the bottom from August, is starting to have a little bit of stress up here at the top, and it doesn't look right now like it's going to have that momentum to carry it up through that prior high there. It might need a little bit of a pullback before we make that run. If it could pull back to, let's say, I don't know, 29.40 or thereabouts, I think that would be a healthy little pullback right here where it could kind of reset itself, try to catch a little bit of the support with the technical analysis theory that old resistance becomes new support right there. And then after that, assuming that everything's going smoothly from a geopolitical perspective and in different news perspective, that at that point it could then try to relaunch for that new high by the end of the year. But right now it's starting to look a little bit stressed up there, despite that bullish posture that the market forecast intermediate line is still telling us that we have. Do note that the market sentiment line continues to fall. We're at 65 and falling right there. That is a longer term view that we're looking at, but that does kind of fly in the face of what we've seen in terms of a market rally in recent weeks. So not any sort of major concern at this point. We'll want to keep our eye on it, as we always do. If we're due for a little bit of a pullback, I think we have an acceptable level there around 29.40, as I mentioned before. Let's go ahead and take a look at another chart now. In this particular case, let's go ahead and talk about the 1040 crossover method. Not going to spend a lot of time on this, but just wanted to remind you guys that on this longer term view here, the Russell 2000 is the only one that had a bearish crossover. That's why you see that pink background color of the chart there, telling us that the 10-week moving average is slightly below the 40-week moving average. But with the outperformance of the Russell 2000 this week, if that continues, don't be surprised at all if we continue to get this flip-flopped type of posture here, where we go, pink to green to pink to green to pink, and we might very well go to green here by the end of the year on the Russell 2000 as well, assuming that this market rally that we've seen established recently does hold. From a 3 green arrows perspective, let me pull up that chart now. You can see here that on a 3 green arrows perspective, we do have 3 green arrows on all 4 of our charts right now. The one that does look the most impressive at this exact moment in time is, once again, the Russell 2000. Notice that these bars on the MACD histogram continue to grow here, and they are colored in green rather than gray. What that is letting us know is that momentum is increasing at an ever faster rate, and that is a positive sign. It's telling you that that's where the market action is right now. So again, one more way to look at this and kind of understand that the small caps are coming back to life here all of a sudden after kind of being forgotten about for several weeks, if not months. All right, let's go ahead and have a little bit of a change up in my typical routine of the charts here, because I wanted to spend some time on what I've been discussing on Twitter for the last couple of days. I noticed this yesterday morning and has continued to be the case until today, which is there is a seismic shift that is taking place from a factor perspective right now. Let me go ahead and pull up my factor comparison chart first of all. So I shared this on Twitter yesterday. Again, my handle is @BrandonVanZ. Make sure you're following me there if you want to be kept up to date throughout the trading day on the things that I'm noticing in the stock market. But I shared this yesterday as I first started noticing it, because it started affecting one of my classes that I was teaching, and something was just going haywire, and I thought maybe the market was starting to spiral out of control. And then I look and the market's not really doing much of anything, and I realized it's only affecting certain parts of the market, and other parts of the market were starting to kind of make up for where we were starting to see some losses. So in other words, there were winners that were offsetting losses, and in the end it looked like it was a wash in the marketplace, but it was entirely different than everything that we've seen up until this point in 2019. I teach a factor-based swing trading class on Wednesdays that several of you that are premium members of Market Scholars attend. And in that class, we try to determine where is our next best trade? Where is it coming from? What segment of the market is it coming from? And we chop the market up into 6 different segments, everything from low size to dividend yields to value to momentum to quality to low volatility. In this particular graph here, you'll typically find that these lines will be very similar to one another. Now, there's always going to be some that are leading and some that are lagging, but for the most part, when the stock market is up, all these factors are kind of going up, and when the stock market is down, they're all kind of going down, just at different rates. Well, that's where things really changed right out of the gate on Monday morning. And it's even advanced further when I look at it here today. So I shared this graph on Twitter both yesterday morning and then this afternoon as well. But this is where things stand. And if it looks strange to you, it should, because you don't see this type of behavior very often. Value, which is this blue line up here at the top, has basically just erupted in price performance in the last couple of days. At the same time, momentum has fallen off of a cliff. Now, for those of you that have been in my Wednesday swing trading class, you'll know that the leading factors in the vast majority of weeks that we've been conducting class have been low volatility and momentum. And so that makes this a bit peculiar, because all of a sudden the very 2 factors that were consistently leading the market week after week after week after week are now the ones that are the odd men out or the odd women out, and they're looking in. And the forgotten about children are the ones that are erupting higher right in front of us. So that's kind of what I was mentioning in the intro. The average person that just picks up a copy of the Wall Street Journal tomorrow will have no idea what is taking place below the surface, but there are monumental shifts taking place right now where all of a sudden everything that was unloved is now loved, and everything that was loved before has been thrown out the window here in terms of momentum and low volatility. So the momentum, that's going to include a lot of those cloud and software as a service stocks that I mentioned before. Low volatility includes a lot of REITs and utilities, stocks that went up because interest rates were going down. Now note, that is different than dividend yield and value. Sometimes people get confused and think, well, wait a second, isn't low volatility with REITs and utilities, aren't they the same thing as dividend stocks and value stocks? No, they're not, especially in 2019. Now, they can be in different eras, but that's not where we're at right now. Those stocks have launched higher because of their interest rate sensitivity. I'm talking the REITs and the utilities. They have not gone up because their earnings have improved dramatically. They've effectively been a beneficiary of a macro event that's taken place. Meanwhile, a lot of other stocks that pay dividends, talk about your banks and your industrial companies, etc., they've been forgotten about in most of 2019. Now is their time to shine. So you're seeing value, dividend yield really erupt higher here in the last couple of days, and the traditional leaders for much of 2019 have fallen by the wayside. Another way to look at this, I have another chart kind of drawn up here to kind of show you this in a slightly different view. So let me show you this 6 grid right here, and it can kind of highlight exactly what I'm looking at, because this is looking back over the last month, and these are the 6 different factors that we focus on in my swing trading class. We'll notice the low volatility factor, which is kind of this one in the upper middle here, has fallen dramatically the last 2 days. Notice that the momentum factor has fallen dramatically in the last 3 days. Notice during those exact same time periods that dividend yield has gone up. In fact, dividend yield has been on basically a 5 or 6 day winning streak, and value has also been on a 5 or 6 day winning streak. So basically all the money coming out of here and all the money coming out of here is now going into here and going into here, and the net effect on the stock market is basically zilch. So for those of you that are a little bit more active with your portfolios, you might be able to find opportunities when you're trying to take advantage of that, which is exactly what we attempt to do in my swing trading class, where we've won 15 out of our last 18 trades, and we've been doing a really good job there. So if you are a premium member of Market Scholars, I would invite you to join me tomorrow for our live class if you can make it, which is at 2 p.m. Eastern time, where we put on another trade based off of these movements that we've been seeing here more recently. Another thing that I wanted to kind of take a look at is on the sector perspective. So let's go over here and now take a look at a sector 12 grid. And this will give you a good sense of what I've been referring to regarding the low volatility factor. So notice the utilities and real estate in the lower right-hand corner here. Notice the straight line down in utilities, and notice the straight line down there in real estate. In fact, utilities is the only sector on the board that currently would be considered bearish from the market forecast intermediate posture perspective. All the other charts, as you can see, are bullish across the board. Technology remains concerning as well. While it does have that green background color at this point, we've had those 3 straight down days for XLK, which again is part of that momentum factor that is starting to fade right now. So then who are the beneficiaries of this move that we've been seeing here in the last couple of days? Well, as I mentioned before, banks and industrials have been a couple of those areas that have really benefited. Notice the financials have started going straight up ever since interest rates have started to kind of stabilize. Remember, we've been in an environment where interest rates have been going basically straight down for the last couple of months, and all of a sudden that trade is starting to unwind, and when it does, those financials tend to benefit from that unwinding. And then you're also seeing the industrials going kind of straight up here in the last week or so as well, and again, they had been kind of thrown out as kind of your value trades earlier in the year, and now money is rotating into them. So there is a pretty darn big upheaval that is taking place, whether you're looking at it from a factor perspective or whether you're looking at it from a traditional sector perspective. Briefly over here on the internet, thank you to everybody who does click like for us on these videos. This is over on the Market Scholars website. And remember, when you're watching these videos, if you're watching it over here, you can actually click like for us on Twitter while you're watching it. We have these kind of embedded little widgets right here. One of them is for Twitter, one of them is for Facebook. So while you're watching this, if you're getting value out of what you're learning here, I would encourage you to click like. And thank you to the 102 of you that did that for me last time on Thursday. And speaking of Thursday, normally I do this video on Tuesdays and Thursdays. I'm actually going to be taking a day off this upcoming Thursday as I have one of my old friends and his wife coming to town, and so we're going to take a day off and enjoy some of the outdoor activity around here. So I'm not going to be doing the video this Thursday, but anyway, thanks to the 102 of you that did do the video or did click like for me on the video last Thursday. We do appreciate that, and it's your way to let David and I know that you want us to continue to do these videos, that you get value out of them. So we think it's a pretty good trade-off. You give us a like, we'll continue to do them for you. Let's go ahead and also, while we're over here, have a quick chat about the sector selector. This is typically something that I put out for my Monday class, my top-down trend trading class, and many of you see the upper graphic. I share that regularly, which kind of gives you the high-level overview of the various sectors and the rankings that are taking place there, and that's produced every Friday night using the full week's worth of information. So I'll do that again this upcoming Friday. But today what I wanted to do was share with you the bottom portion. This I typically do not share with those of you in this particular audience. This is usually meant exclusively for those of you that are premium members of Market Scholars that attend my Monday top-down trend trading class. But today I wanted to use it because I wanted to kind of share with you a quick little tidbit of insight there that can be useful for you, which is this. when we're looking at this graphic, there's a lot going on here. So if you are a premium member, I can get you a tutorial to help you understand this a bit better. But the point that I want to make right now, real quick, for a broader audience that watches this YouTube video is when you're looking at these various ticker symbols in the kind of the green in the upper half here, those are all the stocks in the Market Scholars 1000 that hit new highs last week. The ones down below here in the pink are the ones that hit new lows last week. So last week we had 182 stocks hitting new highs in that group of 1,000 stocks, and only 29 stocks hitting new lows out of that group of 1,000 stocks. So the market internals seem to be fairly strong. Market breadth is fairly strong. But the point that I wanted to make by showing this to you here tonight was I just looked at all 29 of these stocks that hit new lows. All but one are up this week. The only one that was the exception there was Tilray, and who knows, maybe by the end of the week it will be up as well. But the point that I'm trying to make is this is a market that in the last 48 hours has fallen in love with everything that it hated just last week. Kind of sounds like a bad high school relationship, right? It's on again, it's off again, it's on again, it's off again. Well, last week, all of the most hated stocks out there are now this week loved by everyone, it seems. 28 out of the 29 stocks hitting new lows in this list are now up this week, and many of the stocks that were hitting 52-week highs last week are down this week. So again, that's going back to that shift that I was mentioning before from a factor perspective, where momentum stocks, and remember all these stocks hitting 52-week highs here, they could be considered your momentum stocks. They are falling out of favor in the last 2 days, and the love is now going over towards the stocks that were once out of favor. In fact, many of those on that 52-week lows list you might consider kind of more value kind of stocks that are out there. So anyway, from a trading perspective here today, as you guys know, we like to do our application-based education here at Market Scholars. And since we're having the conversation here about this graphic, I thought that we would pull our trade idea from this graphic as well. And the stock that I wanted to focus on is this one that you see right here. I know those of you watching on a phone are having a hard time squinting at all this data, so I'll just let you know that the ticker symbol is SRPT. It is a healthcare stock. It's a biotech-oriented stock that did hit a 52-week low last week. It is up so far this week, along with, its 27 other compadres there in the the 52-week lows list as doing a little bit better this week. But perhaps there's a reason to get a little bit more excited about a potential further rebound beyond where we're at right now. So let me kind of explain what I'm looking at by transitioning my thoughts on over here to the Paper Money platform once again. And for this, I'm just going to pull up, first of all, let me pull up chart 4A. This is the Market Forecast 1 grid, because I did want to share with you one thing that stood out here, and then I'm gonna take you to a different chart as well. So SRPT, that's Sarepta Therapeutics. Now again, notice this stock is hated right now. It did really well today. Notice it's up 5%. Again, trash is cash in this marketplace all of a sudden in the last 48 hours. And this stock proves that point out. Yesterday, it hit a brand new 52-week low, rallied for the rest of the day, continued rallying today, went up over 5%, obviously destroying the stock market's return today. And not only that, but it closed on its high. I believe that was by, to the penny. Yeah, it wasn't. I take that back. It was 5 cents off of the high. But as you look at that candle, that's a healthy looking candle right there. Basically, it's a candle when you see it empty, I guess is what you would call that candle. It basically means that it started in the lower left-hand corner of that box, and it ended in the upper right-hand corner of that box. So as the day went along, and this stock went from being up 1% to 2% to 3% to 4% to then 5%, people were tripping all over themselves to try to buy this stock at ever-increasing prices. You'll notice that as it did that, it also started engulfing several of these prior candles where we also were kind of receiving kind of these oversold cluster signals here, one after another here about a week or two ago as well, which is telling us that things were getting a bit oversold to the downside. You'll also notice that we have what we call a near-term divergence. What I mean by that is when you look at this blue line right here, which is the near-term line on the market forecast technical indicator, it has a higher low at the same time when prices were still going lower. And I'm going to show that to you here in a moment on a slightly different view as well. But I wanted to point that out. And I also wanted to point out that if you were to switch this to a weekly candle chart instead of a daily, so up here where it says D, let me click on that. And let's look at a 1-year weekly candle chart instead. Wanted to point out that on a weekly chart basis, we received an oversold cluster last week. Notice this little kind of dot. It's a green dot. I don't know if it's clear to you guys, but it's a green dot on my side. And what that signifies is that all three of the major market forecast charts are all in the same lower reversal zone on the same day. In other words, the green line, the blue line, and the red line were all below 20 on the same candle. In this case, it would have been a weekly candle, so that's the week that ended Friday right there. But it's the only one on the board. Notice that there have been other times where the stock has sold off, but the green line couldn't quite get into the lower reversal zone. Stock sells off, green line can't get into the lower reversal zone. This time the sell-off was so extreme that not only did the blue and the red lines get in the lower reversal zone, but so did the green line. So that is an extreme oversold condition there when you start seeing that show up on the weeklies in addition to the dailies that I showed you a moment ago. And then I also wanted to bring up a slightly different view. So let me take a look here at this chart that I used for my swing trading class, where we focus a bit more on the near-term line. And let me type in the ticker symbol SRPT there. And I wanted to show you that the same kind of concept of a bullish near-term divergence is setting up here as well, as you have peak or trough, I should say, number 1 on the blue line there, and trough number 2 right there, clearly higher. Yet when you look at the candlesticks that are associated with it, you're seeing a slightly downward tilt during that time period there. So we're starting to break out here on the blue line, which is a little bit more important for those of you that might be kind of more swing traders as opposed to trend traders. You know, obviously this is still a very ugly looking trend, and for those of you that need the trend going in your direction, you're probably not going to be too excited about this trade idea. You have to be kind of somewhat brave to be counter trend, as we will be in this particular trade here. But you know, if there was ever a market condition where that would make some sense, it seems to be right now maybe one of those where being counter trend makes sense as the market is starting to throw away everything it once loved and go into the things that it once hated. Some of you will also notice that we had this huge gap down here. Now, Sarepta is a biotech stock. This probably had something to do with a failed, drug experiment or something along those lines, or a trial, or perhaps a failed partnership or something along those lines. So I'm not here to say that the news is good or anything along those lines. I'm just here saying that what was once unloved is now loved, and we have some technical reasons why perhaps a rebound or a dead cat bounce could be in store. Now, because of that, we have this huge gap that's taken place here. And so some of you would say, yeah, I don't really want to push this too hard, because when you have this gap theory, the idea is that this will become kind of some resistance area right here where the stock gap down to, and it won't start kind of breaching the gap zone itself. So what I wanted to do here is set up kind of a shorter term trade where we start looking for a price target up in this vicinity, but we're not requiring the stock to come up here and breach that air pocket or that gap up there. And in doing so, I wanted to establish a stop loss down below just in case we're wrong, because chances of us being wrong here are fairly decent. After all, price momentum is dramatically against us right here, yet we're starting to see some positive vibrations. Notice that the background color of this chart just went to blue today. That signifies that this blue near-term line is now giving us a bullish posture, even though the green intermediate line would still be considered bearish at this point. So this is not a trend trade, but from a swing trading perspective, for those of you that want something counter trend and are brave enough to take a trade like this in your own paper money accounts, then perhaps it might be worth a little bit of a flyer here. Now, the way that I typically do swing trades is kind of a one-for-one mentality. In other words, I'm going to risk one to gain one. What that allows me to do is, as long as I have a win rate that's greater than 50%, I should come out on top in that type of a scenario. And so what we're going to do here today, let me kind of show you what my thought process is. I'm going to get my calculator out here. And you'll notice that all three of these candles on the top side are right around 100 or thereabouts. They're in that general vicinity. And so 100 is a nice big round number that sometimes people will sell at. They'll pick up their phone and tell their broker, hey, sell my shares at 100, right? Because they're just being a little bit lazier, perhaps, than many of you that watch these videos and do things on your own. And so what I want to do is I want to kind of try to achieve a price target of $99.99. And that way, if there are a bunch of lazy sell orders at exactly 100, we will be out of our trade by then. So if I take $99.99 and subtract out where the current price of this is at, which is $91.07, that means that we have a difference and a risk per share of $8.92 per share if we practice that one-for-one reward risk mentality, which we will. So we have $8.92 worth of upside potential, and that means that I need to subtract this number out of the current price to see where we're going to put our stop loss. So I'm going to just go ahead and hit the minus sign here and subtract that from 91.07, and that is 82.15. Of course, you'd cancel out that minus sign right there, but basically our stop loss will be at 82.15. So an upside price target of 99.99, a downside stop loss at 82.15, which you will see is kind of right down in about this vicinity that I'm pointing at. But the key aspect of that is it would require this stock to breach its prior low from yesterday before we're stopped out. Yesterday's low before it started rebounding was 83.62. So it's got to prove it to us. If we're wrong, it's going to have to come down and continue that downward trend. Otherwise, if it does start reversing course and goes higher here, we have a chance to maybe make a quick little profit off of this. So I'm going to go ahead and just right click on the trade and go to buy custom with OCO bracket. That loads up our trade down below. Now I'm just going to leave this as 100 shares because I've got plenty of capital to burn in this particular paper money account, but obviously you're going to want to position size according to whatever your rules state. I am going to change this to $91.07, which is where we closed today. So hopefully we get filled right around the same place as where it closed here today. I will just leave that in there as, actually we'll change that to good till cancel order. And then the line directly below it, that will represent our upside price target of $99.99. Again, changing that till good till cancel. And then directly below that, I'm going to change that line to good till cancel as well. That will represent our stop. And then on the final line, I'm going to change that to our stop price of 82.15. Let me go ahead and click confirm and send, and we'll ship that off. See if we can get filled first thing in the morning. All right, well, thanks for joining me here yet again tonight. We've had quite the tumultuous rotation in the markets under the surface for the last couple of days, yet most people probably aren't even paying attention. So try to use that knowledge to your advantage. Start looking at your portfolio, seeing if you need to start liquidating any of the once high flyers that the market loves, and then start looking at maybe some of those 52-week lows lists to see if you see any setups for potential upside rebounds here in the coming sessions. So if you got value out of tonight's video, I would encourage you to click like for me on Twitter. I'll have the main tweet pinned to the top of my timeline there, and you can also do it on our website, as I mentioned before. Thank you very much for joining us here tonight, and David will be back with you tomorrow. Take care, everybody. Bye-bye.